when you have jobs numbers that come out more than double than what's expected, that's inflationary. So the feds are going to slam on the lowering interest rate brakes and say, you know what, we definitely have to raise them. That's number one. But the other part, being a double whammy, it's double inflationary because we're spending more money because 73,000 of those jobs are government jobs.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're the first Friday of the month of October. We get this bang-up jobs report. Everybody's happy. The market's going up. Dollar's going down. Maybe we'll even get some lower yields out of this. It seems like a Goldilocks number almost. Well, Eddie Siddell is with us now. You find him at EGSFinancial.com. Got any questions, comments for Eddie, myself? Shoot us an email, kl@kerrylutz.com. So the job report was more than double what was expected, Eddie.
Yeah. Yeah. It's, I don't want to say it was, Fugazi, but when you look at 73,000 of the jobs, those are government jobs. So that's really not growing the economy. You've got over 96,000 jobs that are, hospitality, leisure, and those are typically the second and third type jobs. That, don't typically not high paying, don't provide benefits. So it's showing that the economy is growing, and it's kind of a double whammy when you think about it like this. So when you have jobs numbers that come out more than double than what's expected, that's inflationary. So the feds are going to slam on the lowering interest rate brakes and say, you know what, we definitely have to raise them. That's number one. But the other part, being a double whammy, it's double inflationary because we're spending more money because 73,000 of those jobs are government jobs. So, I just, the market likes it. We've had almost a, 450, close to 500 point turnaround from where it was down to where it is right now, right before this started. I don't know. I'm still very, very cautious with everything that's going on right now, for sure.
Mm-hmm. So you're not convinced, in other words, huh?
No, it's definitely not rainbows, Care Bears, and puppy dogs yet.
So you're skeptical. You're a skeptic, eh?
Well, it's based on math. You can't have the math telling us one thing, and the public perception and what retail investors want. I mean, they continue to want to drive the market, and believe me, I want nothing more than for the market to go up. But I think with close to $1.4 trillion in commercial loans that are coming due, in less than 2 years, and they're non-recourse. That's the big deal. That's no one's talking about. These are non-recourse loans. So we already have all of these huge hedge funds, real estate hedge funds that are already starting to walk away from $500 million just in the last month. So as they walk away from that, that's going to put more pressure on these banks. And these are small and regional banks. So, I don't think we're out of the woods yet.
Not quite, huh?
Not quite.
There, I got all excited here, Eddie. So you're saying,
did I bust the bubble?
You certainly did. So rates got no place to go but up, even still, huh?
Well, they have already said that they're going to raise them 0.25%. The Fed's already downwardly revised their estimates for 2024 as far as how much they were going to lower rates. So originally it was 100 basis points. They revised it downwards to only 50 basis points. And I've been saying they are going to lower them next year, right before the election in the summer, but it's probably going to be a quarter percent, 25 basis points, because it's about the economy, as we all know that. And so as soon as rates go lower, the market's going to take off, gas prices are going to go down, and everything's going to be good, at least for the short term. But if they lower rates too much, and as long as we keep spending, over $1 trillion more than what we're bringing in a quarter, I mean, we're adding $1 trillion to the deficit each and every quarter. that's inflationary. I mean, until we get that under control, there's just, everyone keeps saying inflation is sticky. I hate that. I think it's sticking around, and it's going to be around for a long time as long as we keep, we're spendthrifts with taxpayer money.
Yeah, well, we just printed out of thin air now. It's no longer taxpayer money.
Well, that's true.
Taxes only bridge about 2/3 or 70% of the budget. Everything else comes from printing money, right?
Yeah, and excuse me, if the budget with what DC really wants to spend, next year and going forward, we're going to overspend by almost 60% more than what we're bringing in. I mean, that's scary. I mean, plain and simple. So, I think fiscally we need to get our house in order. And until we do that, we're not going to be out of the woods.
All right. What about volatility? So till things come under control, we're going to have this enormous volatility. We got real political uncertainty in Washington now, right?
Yeah, more so than ever. I think, going back to the spending, not to beat that into the ground, but, everyone says, well, we don't have a revenue problem, we have a spending problem. Well, I think we have a leadership problem, and that holds true. I mean, we saw it this week. This volatility is going to continue. People want the market likes certainty, and right now there's so many things that are uncertain and up in the air. And up until today, we saw that volatility in the market, a lot of profit taking, and people just out of fear saying, you know what, I'm selling and getting out.
Mm-hmm. That's what starts panics, right?
It is.
Well, the people in the know go for the door, and the people not in the know wind up, at the pile up at the exit, and they can't get out.
That old saying, "Hang on, don't worry, it'll come back." That's a
buying opportunity. It's a buying opportunity, right?
Yeah. Buy now. I heard that this morning. Well, now is the time to buy. I think now is the time to be prudent, not buy in, and really kind of look at where you're at financially. As an investor, and talk to your advisor and say, hey, does this make sense? How much money do I need in growth, and how much do I need to protect to make sure that if this continues on, that I'm not going to run out of money? I mean, that's the key. That
really is the key, isn't it? So, all right. Well, thanks for giving us this brief update, Eddie. We always appreciate you coming on the show. Again, you can find Eddie, very simple, EGSFinancial.com. The link is in the show notes to this interview on Financial Survival Network on our site. You can just click through. While you're there, why don't you sign up for your free newsletter? Really appreciate it, Eddie. You be well. Talk to you soon.
All right, you too, Kerry. Thanks for having me. Appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.